You know, in the crypto world, a new platform seems to pop up every other day. But once in a while, one just explodes onto the scene and does something, well, something truly staggering. That platform is Aster, and its story is one you're going to want to hear.
And when I say staggering, I am not kidding. Just try to wrap your head around this number. Nearly $47 billion. That's the trading volume they hit. Not in a month, not even in a week. We're talking about a single 24-hour period. To give you some context, that's more action than even established giants like Hyperliquid see.
So that brings us to the big, flashing question, right? How on earth did that happen? A number like that just doesn't appear out of thin air. And the answer? Well, it's this fascinating, kind of wild mix of powerful tech, some very influential people, and a healthy dose of pure market chaos. So where do we even begin to unpack this? Let's start with the platform itself. Because at its very core, Aster is a machine, and it was built for one specific person, the professional trader. Yeah, this isn't your first time buying crypto kind of app. Aster's bread and butter is something called perpetual futures. Now, if you're not deep in the trading world, just think of it like this. It's a way to bet on where a crypto's price is going, up or down, without ever having to actually own the crypto itself. And the perpetual part means there's no expiration date. It's built for high stakes, high-speed moves. So what's the big draw for the pros? Well, for starters, it pulls in liquidity from major chains like BNB, Ethereum, and Solana, which means you get better prices. Then there's the absolutely insane leverage. We're talking up to 101x. And crucially, it protects you from things like MV exploits. That's where bots basically front-run your trade and skim your profits. But here's the really clever part. You can use yield-bearing assets as your collateral. So your money is actually still working for you, earning you a return, even while it's backing your trades. And this all happens on-chain, with privacy baked in.
The platform is also smart about how you use it. You've got two speeds. There's a simple mode for when you need to make those lightning-fast one-click trades. And then there's Pro mode, which looks and feels like the advanced dashboard you'd get on a big centralized exchange, but with all those on-chain, decentralized benefits we just talked about. It's kind of the best of both worlds.
Okay, but powerful tech, that's only half the story. In crypto, maybe more than anywhere else, trust and influence are their own kind of currency. And this is where a very, very big name steps into the frame, even if it's just from the shadows. Now, let's be clear, there's no official on-paper partnership between Aster and Binance, the biggest crypto exchange in the world. But you start connecting the dots, the project has ex-Binance people on board, and a firm called Cz Labs, linked to Binance's founder, has a stake. And what that really does is plug Aster into an incredibly powerful and experienced network.
And then the connection got even more interesting. Changpeng Zhao, the founder of Binance, CZ, he clarified in an X space that he's serving in an advisory role. In a market that is just starved for credibility, having a name like CZ, even unofficially attached, well, that kind of endorsement is absolutely priceless.
So we've got the tech, we've got the credibility from the network, but that still doesn't fully explain that nearly $47 billion day. For that, we need to add the third and maybe the most volatile ingredient, pure, unpredictable, human-driven market frenzy.
Okay, picture this. It's late one night, and news starts to break that the YouTube superstar Mr. Beast just bought a massive bag of Aster tokens. What happens next? Absolute mayhem. The price skyrockets, a mind-blowing 7,950% overnight. By the time the sun comes up, the entire community is just buzzing with rumors, speculation, and accusations. It's messy, it's dramatic, and it is exactly the kind of viral explosion that can launch a project into the stratosphere.
Now, a story like that can feel like a flash in the pan, right? Just a one-time hype event. But the real question, the important one, is what happens when all that chaos dies down? Is there anything real being built underneath all that noise? Well, the data seems to say yes. Turns out that one massive day wasn't a total fluke. The platform's futures trading volume has stayed incredibly strong, hitting almost $22 billion recently. This shows that real traders are consistently using it heavily, and that is a much healthier sign for long-term growth than just a single hype-fueled spike.
And the team is not resting. They're actually building their own Layer 1 blockchain called Aster Chain. And L1 is the base layer, like in Ethereum or Solana. So this is a huge deal. They're aiming for a private, super fast, low-fee network with its own built-in exchange. Let me tell you, building your own L1 is a massive undertaking. It signals that their vision isn't just to be another app. They want to be a core piece of crypto infrastructure. And to get people using it, they're planning a pretty big airdrop. 4% of the total token supply is being earmarked to reward users, all based on a point system for interacting with the platform. It's a classic crypto playbook move, designed to bootstrap a loyal and engaged community from day one. But maybe the most telling signal of all is when you just follow the big money. On-chain data is showing that whales, these are investors with super deep pockets, are buying up Aster. We're seeing $50 million in inflows, and what's really interesting is that 34 million of that has been moved off of exchanges and into private wallets. Now, that's not what you do for a quick flip. That's a sign of real long-term conviction. So, you've got the powerful tech, the big-name connections, the viral hype, and now signs of real fundamentals building underneath. So where does that leave us? Let's try to put it all together for a final verdict. All right, so what do the analysts think this is all worth? Well, looking ahead to the end of 2025, the average price target is sitting around $2.45. But in a bull case scenario, if the platform keeps growing like this, some are seeing it go as high as $4. But look, it's definitely not a guaranteed home run. You've got some potential tailwinds. Things like regulatory exemptions for innovation could really help. But then you've got some serious headwinds, too. Big picture economic factors like interest rates, and just the simple fact that any platform built on super high leverage is always going to be risky and volatile. That's just the nature of the beast. When you step back, Aster is really a perfect snapshot of what modern DeFi is all about. It's incredibly efficient, it doesn't care which blockchain you're on, and it has that quiet, powerful backing of industry giants. It really captures that raw, high-stakes promise that keeps pulling people into this space. Which really leaves us with the one big question. Is Aster actually rewriting the rulebook for professional traders? Or is it just the latest, most sophisticated version of crypto's high-risk, high-reward roller coaster? The text says one thing, the hype says another, and the real answer is probably still being written.